third simple rule for investment success, buy right and hold tight.
Buy right means diversify, diversify, diversify in an index fund, which is a great way to invest for reasons I've talked about earlier. You at low cost and all that, but you're diversified, so the intricate ins and outs of the market, you know, steel stocks are doing better, or energy stocks are doing better, or healthcare is doing better, or technology is doing better. If you own the whole market, you get your share of all of that. So, but that's the buy right, very diversified, and the hold tight is what we've talked a little bit about, and that is, you know, when you get these periods of adversity and fear and greed, don't do anything.
Well, speaking of greed, another one of your 10 simple rules are to have realistic expectations. And then you talk about the bagel and the donuts and distinguish the two.
Okay. Well, the bagel and the donut is a talk I gave years ago, and I contrasted, like the investment world. The bagel is nutritious, good for you, substantive, while the donut has a certain sweetness, and it kind of breaks up and crumbles when you eat it. And so long-term investing, holding on, the strategy I just described is the bagel, and short-term speculation is the donut. Just a way of visualizing, you know, which you want, which is the best for you in the long run. And sometimes people may think I'd just soon have a couple of donuts, but they're not going to do you any good. With all due respect for the donut makers of America.
All right, and I like your analogies here. Your fifth simple rule is forget the needle, buy the haystack. Now, what do you really mean by that one?
Well, that's the ultimate argument for indexing. Picking stocks or funds, finding that elusive needle that will give you what you think you want in the future is very difficult. We all know the metaphor of finding a needle in a haystack. It means forget it, it's not worth trying. And I would argue the same thing here. Own the haystack means own the entire U.S. stock market or the entire world stock market. Everybody has different ideas about that. And don't do anything once you get the haystack. No more looking for needles. So it's a you know, Don Quixote had it just right.
All right, and another one of your simple rules is to minimize the croupier's take.
Okay, that's a very good parallel to something I mentioned earlier, and that means get costs out of the equation. I mentioned to you the magic of compounding returns over the long term, the mathematical magic of it. The problem we have in our society is that magic, on the record, is overwhelmed by the tyranny of compounding long-term costs. And I gave you that example of 7% gross return, net return, 9% gross return, and it's cost you 70% of your capital over your lifetime. Be aware of that.